Hello, I am Edmond Jamna, and on behalf of DW Consult, I want to introduce to you Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, and shaky base in accounting to an expert position and to a place of confidence. It is also a platform to stay abreast in all matters of accounting. Tutorials on the Go is also designed to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as any tertiary accounting discipline. All that is required of you is to subscribe to our channel on YouTube at DW Consult and click on the notification bell to be part of it. Also, like and share the videos by way of inviting others to come aboard. Tutorials on the Go, bringing accounting to heart. Now, today's episode's lecture. We've already spoken about what depreciation is, the terminologies of depreciation. We've spoken about the methods of calculating depreciation. We spoke about the straight line and the reducing balance method. Now we are going to look at how we are going to input them into the financial statement. So here we debit the depreciation expense account. Then we credit accumulated depreciation account. So the balance on the depreciation is to be charged to the income statement. Then the balance on the accumulated depreciation is to be charged against the cost of the assets in the statement of financial position. Let's test our understanding. So Lizzie has a year end of 31st December each year. Now on 1st July 2018, she purchases a car for $17,000. The car is expected to last for 5 years and to have a scrap value at the end of the 5 years for $2,000. Now required, we have to calculate the depreciation charge for each of the first 3 accounting periods and show the accounting entries for the first 3 accounting periods, as well as the extracts from the statement of financial position and the statement of profit or loss for each of the 3 accounting periods. Anytime a question is given to you on depreciation and it doesn't mention any method to be used, use the straight line method. Okay, so the depreciation charge is the original cost less the residual value divided by the estimated useful life, or the depreciation percentage times the original cost. So the original cost here is 17,000, residual value is 2,000, giving us 15,000. We divide it by 5, gives us $3,000, and we multiply it by 6/12 because the assets came in 1st July 2018, and we are working it at the end of 2018. So it spent 6 months. So we're going to get $1,500 as the depreciation charge. Now, the treatment is that we pick this $1,500, debit a depreciation expense account in the name of accumulated depreciation, open an accumulated depreciation account, and credit it in the name of what, $1,500. We have to open a car account because the car came in. So we debit it by the cost of $17,000. Okay. So now that it is done, we balance and close off the account, which I believe you already know. So another method of balancing and closing off account for income statement items is that instead of putting the balance here, you can simply put the statement of profit or loss, then that solves it. Okay, so we bring it into the statement of profit or loss for $1,500. Then when it comes to the statement of financial position, we open non-current assets, bring the car there, put the cost $17,000. Then we bring less accumulated depreciation. Then we bring the balance on that account. Then the $15,500 will now be what the carrying value or the net book value as at 31st December 2018. Let's move to 2019. Now with 2019, the depreciation charge will be 17,000 minus 2,000 divided by 5,000. Now it's a full year, so the depreciation charge will be $3,000. When we open the car account, there was a balance coming from 2018, which was 17,000. We bring the balance here as balance brought forward. The opening balance can be written as balance brought forward. If you see in accounting, balance BF, it means balance brought forward. We open a depreciation expense account. We open the accumulated depreciation account. Then it also had a balance in the previous year of $1,500. We credit it as balance brought forward. Now we bring the depreciation charge for 2019, which is $3,000. Come and debit the depreciation expense account in the name of accumulated depreciation. Then we come to the accumulated depreciation account and credit it in the name of our depreciation. So balancing the car account, there will be a balance of 17,000 to the debit. The depreciation expense account will have a statement of profit or loss item of 3,000. The balance on the accumulated depreciation will be $4,500 to the credit. So we move the depreciation account to statement of profit or loss, $3,000. We come to the statement of financial position, open a non-current session, car of 17,000 original cost, then we bring the accumulated depreciation. It has increased from $1,500 to $4,500. So the current value now is $12,500. Let's come to 2020. So because it spent the whole year in 2020, it will be 17,000 less 2,000 divided by 5 times 12 over 12, giving us a depreciation figure of $3,000. Again, we open the car account, a balance brought forward of 17,000. We bring it in here. We open the accumulated depreciation account, then bring the balance as well in, which is 4,500 coming in from 2019. Okay, so when we open the depreciation account, we come and debit the depreciation account for the $3,000 for the depreciation charge of 2020. Then we go to the accumulated depreciation account and credit it with the 3,000 figure. So when we close off the account, the car account again will still have $17,000 debit. The depreciation account will have a statement of profit or loss of $3,000 to the credit. Then we'll have accumulated depreciation having a balance of $7,500. So when we come to the statement of profit or loss, we put the $3,000 there as a charge for the year. We come to the financial position, open a car account, put the $17,000 there. Then we less it by the accumulated depreciation. That is the balance on the account, $7,500. So we have a current value or a net book value of $9,500. So if the business decides to sell the asset in 2020, it would at least expect to get $9,500. This is where we're going to bring our lecture to an end. If you have any question that needs to be addressed, kindly drop them in the comment section below. We'll also entreat you to subscribe by clicking on the subscribe button and click on the notification bell as well. Stay blessed. Poker.